of Am I audible to you?
Yes, sir.
It is showing the audio device has been changed. Okay, actually, Bluetooth is connected. That's why I think there was this problem. Okay, no problem. So it's not working. So adjustment of capital. So the first case is where you will be given total capital of firm. Okay.
Yes.
The second case where total capital of firm is not given. Total capital of firm is not given. And the third case, when partners are required to bring some cash, okay, for payment to retiring partner, okay, and then you have to adjust your capital. So these three situations that will be given in question. So we will discuss about first case. Let's say the question tell you that if partner retires and after payment of retiring partner, we have to keep a 5 lakh as the capital of new firm. Okay.
Yes.
So you have to keep a capital of 5 lakh. Let's say there is 3 partners. It is very simple concept, A, B, and C. And their total capital was 3 lakh, 3 lakh, and 2 lakh. Okay.
Yes.
Now C retires and A and B wants to keep their capital 5 lakh as their capital. Okay.
Yes.
Okay. In this situation, if the profit sharing ratio is 3:2:1, then can you tell me what will be the new capital of A and B?
Oh, 3 lakh, 1 lakh. Is it 2 lakh, 2 lakh, 1 lakh?
Okay. See, A, B, and C were partners, and C retires. Okay.
Yes, sir.
And A and B wants to keep their capital 5 lakh.
Okay. Then 3 lakh, 3 lakh and 2 lakh.
Yes, 3 lakh and 2 lakh.
3:2.
What we have done here is distribute the new capital given in the question in their profit sharing ratio, in their new profit sharing ratio. Yes.
Yes.
Okay. It is very simple. So what you have to do in first case is, first you need to calculate adjusted capital of partners. Means after all adjustment like revaluation, goodwill, uh, profit and loss distribution, reserves, you have to adjust all these items and then calculate adjusted capital. Okay.
Yes.
And after that, you will compare this adjusted capital with this new capital. Okay.
Yes.
And if that adjusted capital is more than this new capital, then partner will withdraw their capital or cash from the business. Okay. Okay. Let's
Yes.
say these are their adjusted capital after all adjustment. Okay. And C retires, so he will take his capital. There is no problem with that. Okay. Okay. After that, A and B adjusted capital was 3 lakh and 3 lakh. But new capital should be 3 lakh and 2 lakh. Okay. So is there any difference in their old and new balance?
Yeah. Difference of 1 lakh.
Which partner?
B.
B. So what you think? B adjusted capital is more and his new capital is less. So he will withdraw cash or he will bring cash.
He will withdraw cash.
Yes, because his old capital is more than the new capital, more than the required capital. So he will withdraw 1 lakh. Okay.
Yes, sir.
This is very simple concept. You don't have to prepare the account, just calculate adjusted capital, okay, and compare it with their new capital. If the amount is less, then he will bring, and if the adjusted capital is more than the new capital, then he will withdraw cash. Okay.
Yes, sir.
Okay. The second situation, case 2. In this case, actually, you will not be given the new capital. So what will be the new capital? How we will calculate the new capital in this case?
There is no ratio.
Yes, the same question. 3:2:1, he retires. Okay. And new capital is not given. Means this information is not given. So what we have to do here?
Then we will deduct C's capital and add the rest.
We will.
We will deduct C's capital
Okay.
and then add A and B's, and that will be the new capital.
So what will be the amount?
6 lakh.
6 lakh. Very good. And what will be the A new capital and B new capital?
4 lakh and 2 lakh,
Why?
because the ratio is 3:2.
So it's not into 3:2. Yes.
Yeah. I don't know about the new capital.
Okay. So if new capital is not given in the quotient, then in the same manner, you will calculate adjusted capital. Okay.
Yes, sir.
You will calculate adjusted capital that is already given in quotient. So 3 lakh and 3 lakh. Yes.
Yes, sir.
Okay, after this, you will calculate total adjusted capital. Actually, adjusted capital of each partner you will calculate, and then calculate the total of that adjusted capital. Okay.
Yes, sir.
Okay. After that, total adjusted capital equals to new capital, as you already told me. Yes.
Yes, sir.
You
Okay.
told me that 3 lakh and 3 lakh will become the new capital. Yes.
Yes, sir.
So total adjusted capital of a remaining partner will become the new capital of firm. Okay.
Yes, sir.
After calculation of this new capital, what you have to do, you have to distribute it.
Yes, sir.
So new capital will be distributed in new profit sharing ratio. Okay.
Yes, sir.
So this 6 lakh into 3 by 5 and 6 lakh into 2 by 5. So it will be 2,40,000 and it is 3,60,000. Okay.
Yes. Yes.
So this is your case 2. Now case 3. Case 3, the last case. Actually, it is little complicated. If you want to understand it, please focus. So in this case, you will not be given new capital. Okay. So
Yes.
new capital will not be given. So what we do in this case generally,
We deduct the retiring partner's capital and
don't mention retiring partner capital. You just take the total adjusted capital of remaining partner.
yes, sir.
Okay. Actually, if let's say this 3 lakh, 3 lakh and 2 lakh is there. Okay. Let's say, and there is a reserve of 1,20,000. Okay.
Yes, sir.
In that case, what will be the adjusted capital? So if you will take the retiring partner's capital, okay,
Yeah.
then
Okay.
you will get confused here. You just have to take the remaining partner adjusted capital. So 3 lakh and 3 lakh is their opening
6.
balance. And if you distribute this 1,20,000 between partners,
Yeah.
A will get 60,000, B will get 40,000, and C will get 20,000. Yes.
Yes, sir.
So the adjusted capital of A will be 3,60,000.
Yeah. Yes, sir.
We have added this reserve.
Yeah.
And adjusted capital of B is 3,40,000.
Yes, sir.
So total adjusted capital will be 7 lakh.
Yes, sir.
Is that clear?
Yes, sir.
So you have to adjust all the items and then you will take their balance of remaining partner, balance of remaining partner.
Yes, sir.
That will be your adjusted capital and that will be your new capital if it is not given in the quotient. So new capital is not given. Okay.
Okay.
So if it is not given, we will generally take the remaining partners new capital. Okay.
Yes, sir.
Okay. But in this case, you will be given one more information.
Okay.
One more information is they have to, for payment to C, for payment to C, they have to bring cash. Means A and B have to bring cash. Okay.
Yes, sir.
In a manner so that their capital will be in proportionate to their profit sharing ratio. Okay.
Yes.
So for payment to C, they have to bring cash in a manner so that their capital will be in proportionate to their profit sharing ratio. Let's say after adjusting this reserve, amount payable to C was 2,20,000. Yes.
Yes, sir.
So we have to pay this amount.
Yes, sir.
And for payment of this amount, A and B will bring cash.
Yeah.
Okay. Now, if A and B will bring cash, their capital will increase, yes or no?
Yes, sir.
Okay. Can you tell me their individual capital will increase or their total capital will increase?
Individual.
Individual. Total capital will not increase?
Both will increase actually.
Both will increase. Okay. So, can you decide, can you tell me that how much A capital will increase?
If he brings total 2,20,000.
Yes. Can you tell me what will be the
Yeah, A is bringing total 2,20,000, or they're
A is
sharing it in the
bringing 2,20,000?
2,20,000. Are they bringing it according to the profit sharing ratio?
No, no. Their profit sharing ratio is 3:2. Okay, the new
Yeah.
profit sharing ratio. So
Okay.
they want to bring capital in a manner that their new capital will become in proportionate to their profit sharing ratio. Okay, so their new profit sharing ratio and new capital will be in proportionate.
What does that mean? Proportion.
Proportionate means, let's say if total capital is 5 lakh
Yeah.
and profit sharing ratio is 3:2, so their capital is 3 lakh, 2 lakh.
Okay, like that.
You can say their capital will be as per their profit sharing ratio.
Okay. And here the ratio is 3:2 only.
Yes.
Yeah. So then this 2 lakh, how are they giving it? Like A and B equally they're distributing?
You have to decide that.
Are they giving it equally?
You have to decide that. There is no information about this in question.
Yeah. Okay. Then I think A will be increased by 1,10,000 and B will be increased by 1,10,000.
Okay. So B old capital was 3,60,000. A
Yeah.
old capital was 3,60,000
Yes, sir.
and B old capital was 3,40,000.
Yes.
Clear?
Yeah.
You are saying that they will bring 1,10,000 each.
Yes, sir.
So what will be their new capital?
4,70,000
And
4,50,000.
is this in profit sharing ratio? 3:2?
No.
No. So this answer is incorrect.
Yes.
Because their capital should be according to their profit sharing ratio.
Yeah. Okay, then you can deduct from their capital.
You can deduct, yes, 1,10,000.
No, not deduct one. Like to make it 3:2, so 3 lakh and 2 lakh. Deduct 60,000 from this and 1,40,000 from B.
1,40,000 from B.
Yeah. Then it will be 2 lakh.
And from A?
60,000. But that's only 2 lakh.
So it will become
2 lakh.
A capital will become 3 lakh.
3 lakh.
3 lakh and B capital will become 2 lakh.
Yeah. But we need 20,000 more.
Yes. So that is not correct also. Actually, we are not sure that which partner will bring how much cash.
Yeah.
Okay. So
Okay.
we are sure that they will bring cash, but who will bring how much, we don't know.
Yeah.
Okay. So what we have to do here, we will take their 3,60,000 of A, 3,40,000 of B. Yes.
Yes, sir.
This is their total capital, total adjusted capital, 7 lakh.
Yes, sir.
And if by both they are bringing cash 2,20,000.
Yeah.
Both. Okay.
Yeah.
So their capital, total capital will increase by 2,20,000 or not?
Yes, sir. 9,20,000.
Whoever will bring the cash, their total capital will increase. Let's say A is bringing 2,20,000 in full. A. So A capital, new capital will be 5,80,000. Yes.
How?
360 plus 220 if A is bringing whole money.
Okay. Yes, sir.
And B will bring 0. So his capital will be 3,40,000.
Yes, sir.
So total capital should be 920. Here
Yeah.
you see it is also 920.
Yes, sir.
So whoever is bringing cash, it is not necessary for us to know. Okay. But we know for sure that they will bring total cash of 2,20,000. Yes or no? They will bring combinedly total cash of 2,20,000 for payment of C.
Yes, sir.
Yes. So their total capital will increase by 2,20,000.
Yes, sir.
Okay.
Yeah.
So there is no effect on this amount, total amount, by whoever is bringing cash.
Yeah.
So 9,20,000 will be total capital, and then you will distribute this 9,20,000 in 3:2. This is their new capital, and if you distribute in 3:2, the amount will be
5,40,000.
what you said,
5,40,000.
5,40,000.
5,40,000 and 3,60,000.
No. 1 lakh.
Oh no, 9 lakh, right? I did 9 lakh. 9,20,000.
And 1,84,000 into 2. So
5,52,000.
5,52,000, and it will be 3,68,000.
Yes, sir.
This is in new ratio. Yes, you can see
Yes, sir.
3:2. Now, how much cash will be brought by A? A capital was 3,60,000.
Yeah.
And he has to keep 552. So you will
Sir,
get,
how is it proportionate to the ratio?
wait 1 minute, 3,68,000 minus 3,40,000. So B will bring 28,000. Okay. What are your questions?
My question is, 5,52,000, 3,68,000, they're not proportionate to the ratio, right?
Yes, it is proportionate.
How? Because you said 3:2 means it should be 3 lakh and 2 lakh.
Yes, yes. You can see here, if you divide it by 3, you will get 1,84,000.
Yeah.
And if you divide it by 2, you will get 1,84,000.
That is proportionate.
Yes, 3:2. You can see it is multiplied by 3:2.
Okay.
The total is 920.
Yeah. How did you find this 1,84,000?
Actually, I have divided this into 3:2.
Okay.
Actually, their old capital was 7 lakh in total, and they will bring cash of 2,20,000. So their total capital will become 9,20,000. Yes or no?
Yes, sir.
So this 9,20,000 is total capital of new firm. So we have divided this into 3:2.
Yes, sir. I got it.
Okay. So
Yeah.
920 into 3 by 5, 920 into 2 by 5. You will get this amount.
Yes, sir.
Okay.
Yeah.
And A has to maintain this cash balance, and their old cash balance is 3,60,000. So I have deducted this 360 from the current balance, and it is 1,92,000. 368 minus 340, it is 28,000. Yes.
Yes, sir.
So A will bring 1,92,000, B will bring 28,000. The total will become 2,20,000, and it will be paid to C. Yes.
Yes, sir.
You understood the concept or no?
Yes, sir.
So these are 3 cases of adjustment of capital in retirement chapter.
Okay.
Do you have
Yeah.
any doubt?
No, sir. It's clear.
Okay. Have you tried question from the book?
No.
Why?
I forgot to log in also.
Actually, if you will not solve these type of question, then you will not able to understand the question in your examination. So please try to solve those questions. You don't have enough time to forget these things.
Yes, sir. Yeah.
Okay.
Okay.
So make sure that in next class, you will solve those questions. Okay.
Yes, sir. I will.
Okay. Now, after this, there is last reconstitution concept, that is death of a partner.
Yes.
Actually, death of a partner chapter is very similar to retirement of the partner. There is only one difference, that retirement can be planned, but death cannot.
Yes, sir.
Okay, you can plan your retirement that you will retire on 1st of April or 31st of March or 31st December. You can plan the retirement, but death cannot be planned. A person can die at any time. Yes.
Yes, sir.
Yes. So in retirement, you don't have to calculate the profit during the year, because Generally, retirement take place at the beginning or end of the year. So you don't have to calculate the profit of that period up to date of death. Okay. Let's say the previous year ends on 31st March 2022. Okay. This is your previous year.
Hello?
Yes.
Okay, so I was muted.
Am I audible to you?
Yeah, you're audible.
Okay. So 31st March 2022 is the last date of previous year. Okay. And in current year, let's say you retire on 1st April 2022. So
Yes.
you don't have to calculate profit. Profit calculation is not required because there is no time gap between these two dates.
Yes, sir.
Yes. But if you see that on 31st March 22, this is the ending of previous year, and date of death is 1st September 2022. Now tell me, it is necessary to calculate profit or not?
Mm,
It is necessary or not?
yes, sir.
Yes. Can you tell me why?
Then we can give the profit money to the death
Actually,
rate.
the time gap is big. You can see here the time gap between these two dates is April, May, June, July, August, 5 months.
Yes, sir.
Okay, so in 5 months, a partner can earn 5 lakh.
Yes, sir.
That's why we need to calculate the profit in case of death.
Yes.
And that's why we never calculated the profit in case of retirement, because retirement can be planned. Generally, the retirement date is in the beginning or ending of the year. Okay.
Yes, sir.
Okay. Now, if you have to calculate the profit during the year, there is two concepts: a time basis concept and there is a sales basis concept.
Yes, sir.
In time basis, previous year profit will be given.
Yeah.
Okay.
Yes, sir.
And time of death will be given. There is only these two information.
Yes, sir.
So what you have to do, you have to take previous year profit, you have to multiply it with period or time period up to date of death. Divided by 12 or 365. Okay.
Yes, sir.
Means if let's say the previous year profit was 3 lakh. Okay.
Yeah.
3 lakh and date of death is 1st September. So time period is 5 months.
Yes, sir.
Time period is 5 months, means from 1st April to 1st September, it is 5 months.
Yes, sir.
Okay. So previous year profit is 3 lakh into period up to date of death is 5 months. So 3 lakh into 5 by 12. Okay.
Yeah. Yes, sir.
So you will calculate the profit on the basis of time.
Yes.
Okay. In second case, sales basis, previous year profit will be given and time of death will be given. Previous year sales will be given and current year sales will be given. There will be these four information in the question. So can you tell me what will be we do in these type of question?
Calculate with the time of death.
Calculate with
The time of death.
time of death only. You will not consider the
Previous year
sales.
profit. Say, I don't know.
Actually, you have to consider sales because current year sale and previous year sale both are given. Okay. So in that case, you have to calculate a rate of profit first.
Yes.
A rate of profit previous year. So profit divided by sales into 100.
Yes.
Okay. So you have to take profit of previous year. You have to take sales of previous year. Sorry, previous year profit and previous year sales into 100.
Yes.
Okay. So you will calculate rate here. And
Yes.
current year sales up to date of death is given. So you will multiply current year profit equals to current year sales into rate of profit that we have calculated. Okay.
Yes.
So let's say we take example here. Previous year sales is 5 lakh. Okay.
Okay.
Previous year profit is 1 lakh. If in this case, date of death is not given, then no problem. You can calculate the profit without date of death. Okay. Current year sales up to date of death is 3 lakh. Now, can you calculate the profit of current year?
Okay. What is the rate of profit?
You have to calculate. Can you solve it or not?
Yeah. So 20% rate of
20%.
profit.
Okay.
Yeah.
And profit?
Current year once as So current year sale is 3 lakh.
Yes, 3 lakh.
Yeah. So I'm getting 6 crores.
6
Crores.
6 crores.
No, wait.
By 3 lakh sales,
60,000.
60,000. Yes.
Yeah.
So first you have to take previous year profit divided by previous year sales into 100. You will get 20% and then 3 lakh into 20%. So you will get 60,000.
Yes,
Okay.
sir. Yeah.
Understand both of the concept?
Yes, sir.
So this is how we calculate profit for current year up to date of death.
Yes, sir.
And after calculation of this profit, what we have to do, we have to calculate the share of partner, share of retiring partner. So retiring partner share. If the retiring partner profit share is 1/6, so 60,000 into 1/6, you will get 10,000. Okay. Because 60,000 is the total profit up to date of death. Okay.
Yes, sir.
And we are not going to give total profit to retiring partner because in this profit, the remaining partner share is also included.
Yes, sir.
That's why we will give only retiring partner share to him. 60,000 into 1/6. It is 10,000. The entry will be profit and loss. Suspense account. Debit to retiring partner's capital. Okay.
Yes, sir.
10,000. 10,000. Now, is there any problem?
No, sir.
There is
Okay.
one more situation which arises here, that if retiring partner is obviously retiring from the firm and the remaining partner profit sharing ratio, a remaining partner PSR profit sharing ratio is same or different. These two situations. What does it mean? Let's say their profit sharing ratio is 3:2:1. Okay.
Yes, sir.
And after retirement, the new profit sharing ratio is 3:2. Or after retirement, the new profit sharing ratio is 2:1. Okay.
Yes. Yeah.
So in first case, it is same. You can see 3:2, 3:2. Yes.
Yes, sir.
But in second case, it is different. So in this case, what we have to do is we have to pass a journal entry of gaining partners capital account debit if the new profit sharing ratio is different. Gaining partners capital account debit to sacrificing or retiring partner capital. Okay. Is this clear?
Yes.
So there is two journal entry. If the profit sharing ratio is same, then you will pass this entry. And if profit and loss sharing ratio is changed, then you will pass this journal entry.
Yes, sir.
Okay, so this is only difference between retirement and death. There is no different calculation in this chapter apart from this?
Yes, sir.
Okay. Now, a name of account changed means in case of retirement, you prepare retiring partner's loan account. Okay.
Yes, sir.
But in case of death, you will prepare executor's loan account.
Yes.
So name is changed. In case of retirement, the account name is retiring partners loan account, and in case of death, the account name is
Executor.
executor's loan account. Okay.
Yes, sir.
Okay. In previous class, I told you that how we will pay the retiring partners loan account.
Yeah.
So can you tell me?
You want the journal entry?
You can also tell me the situation or case.
Uh, I don't know.
Okay. I told you that the first case where we pay the amount in lump sum, and the
Yes.
second case where we pay the amount in
Installment.
installment.
Yes, sir.
So for lump sum, the journal entry is loan account debit to bank account. The matter is closed. And for installment, first we have to pass the journal entry for interest. So interest account debit to loan account, and then loan account debit to bank account. Okay.
Yes.
These two entry for installment and this single entry for lump sum payment.
Yes, sir.
I've also prepared the loan account and show it to you. Yes or no?
So can you repeat?
I have also prepared the loan account in previous class.
Mm,
Do you remember that?
1 second.
Loan account?
I think no, I only showed retiring partners capital account.
Retiring partners capital account?
Yeah.
Okay. Let me check. Maybe there was some network issues also. Yes,
Yeah.
that's why I think. Just 1 minute. Okay. Sorry, actually. Okay, so how to prepare loan account? So for that, we have to take an example here. Let's say amount payable to retiring partner or deceased partner is 1,21,000. And 21,000 is paid immediately. And balance is paid in 4 installments. 4 equal installments along with 10% interest. Okay.
Yes, sir.
So this is the question. Balance is paid in 4 equal annual installments. Okay. So this is your question. In this case, we have to prepare a format. Okay, so this is your particular amount, particular amount, and this is, you can say, executor's loan. First, when the amount is transferred from capital account to this loan account, the first entry will be for transfer by partner's capital account. Okay.
Yes.
It is 1,21,000. And it is said that 21,000 is paid immediately. So to cash 21,000. If you want to prepare a column for date, then you can do it. Okay.
Yes, sir.
So if date is mentioned in the question, you should prepare the date column also. But there is no date given here. That's why I have not prepared it. So by partners capital 1,21,000 and to cash account 21,000. Okay. Now
Yes, sir.
in first year, first installment will be paid along with interest at the rate 10%. So by interest account 1,21,000 and 21,000 is paid immediately. Generally, the interest is charged on the balance amount. Yes.
Yes.
So balance amount here is
1 lakh.
what is, yes, 1 lakh. Very good. So interest will be calculated on 1 lakh. 1 lakh into 10%, it is 10,000. Okay.
Yes.
Is that
Sorry,
clear?
your voice is breaking.
Actually, After some time spent in class, I think network problem arises. Yes. Am I audible or not?
Yeah, you're audible. It just near your name, it shows yellow color and it's breaking.
My video.
No, like near your name, there's this 4 bars, right?
Okay. Actually, screen is not showing.
No, everything is showing. Is just in the middle. Right now, it just happened. Now I can hear you.
Okay.
Yeah.
So it is 1,21,000. 21,000 is paid immediately. And if we do the calculation, working note number 1, interest, first year, second year, third year, and fourth year. Okay. So 1 lakh into 10,000. Is this clear?
Yes.
Okay. Now, can you tell me what will be the installment amount?
So sorry.
What will be the installment amount?
10,000.
This 21,000 is down payment. Okay.
Yeah.
Down payment means payment at the time of contract or whatever the exact time. Okay.
Okay.
So it is called down payment. So down payment is 21,000. And the first installment amount, what will be the first installment amount? Okay. Actually, first you have to understand that working note number 2, installment is always equals to principal plus interest. Okay. Principal plus interest. Is this clear? Hello, Aditya.
Yes, sir.
Is this clear?
No, actually, can you repeat it? I didn't understand.
Installment equals to principal plus interest.
So what's principal?
Yes, I'm telling you, but can you see the formula? Do you understand the formula principal plus interest? I will
Yeah.
explain the principal and interest amount.
Okay.
Okay. Principal means the actual amount. If you borrow a loan, let's say, if you borrow a loan, okay, 10,000, okay,
Yes, sir.
and you have to repay this amount in 10 equal installment. So what
Yeah.
will be the installment amount?
1,000.
1,000.
Yeah.
And you have to pay also interest on this amount. So plus interest, yes.
Yes, sir.
So this is your principal. Total principal amount is this, the amount you borrowed.
Yeah.
Okay.
Yes.
So if you take a loan, actually I'm suffering from cold. That's why I have to take a break in between.
Yeah, sir. No problem.
Okay. So it is 1,000 plus interest. So total amount borrowed by you is called principal. Okay.
Yes, sir.
Okay. So you can see here that balance principal amount is 1 lakh. Yes or no?
Okay, sir. Yeah, it is.
This is 1 lakh that we have calculated interest on. Okay. And we have to pay this amount in 4 equal installments. So in every installment, in every annual installment, what will be the amount of principal? Should I repeat the question?
Yes, sir.
Okay. The total balance payable is 1 lakh. Yes.
Yes, sir.
And we have to repay this 1 lakh in 4 annual installment, 4 equal annual installment. Okay.
Yeah.
So what will be the amount of each installment?
25,000.
25,000. Very good. So the principal amount in every installment is 25,000.
Yes, sir.
So 25,000 plus interest 10,000 of first installment. So the amount is 35,000. Is this clear?
Yeah.
So here it will be 35,000. The total amount will be 1,31,000. And 75,000. Sorry, 75,000 is balanced. Sorry. The amount is 131,000. So the total amount is 131,000 and the 75,000 is balanced CD. Okay.
Yes, sir.
So it will become the opening balance in next year. So by balance BD 75,000. Can you tell me the amount of interest in second year? Amount of interest in second year?
Yes, sir.
What will be the amount?
Is it 7,900?
Very good, 7,500.
Yeah.
Whatever you think, okay, whatever you thinking is, you can say it. Okay, either it
Yeah.
will be correct or incorrect. If it is
Okay.
correct, I will tell you. If it is incorrect, then I will teach you how to calculate. Yes or no?
Yes, sir.
So you should give some answer.
Yeah.
So 75,000 into 10 by 100, it is 7,500. I told you that interest is calculated on balance. Okay. So
Yeah.
the balance amount is 75,000 in current year.
Yes, sir.
Okay. Now, what will be the interest plus principal? That is second installment amount.
Um,
What will be the second installment amount?
is it
Yes.
I don't know. Can you scroll up one?
Yes.
Is it
Is it? Yes, Aditya. You.
hello?
Yes.
Yeah. 25,000 plus 7,500.
Very good. Yes.
Yeah.
25,000 is the principal amount. So it will always be same because it is said in the question that we have to pay 1 lakh in 4 equal installment. So it is 25,000 all the time.
Yes.
So 25,000 plus 7,500, it is 32,500.
Yes, sir.
Just wait, battery is running low. 1 minute. Okay, so it is 32,500. So the amount will be here 32,500. Cash
Yes.
account 32,500 and to balance CD. It is 82,500 minus 32,500 is 50,000. By balance BD 50,000. What will be the interest amount here?
5,000.
Very good, 5,000. And installment amount?
30,000.
30,000. Very good. To balance CD 25,000. It is 55,000. It is 55,000. Okay, so now the balance is 25,000. This is our last installment. So by balance BD 25,000 by interest 2,500 and the installment amount will be 27,500. 27,500. Is this clear?
Yes, sir.
Do you have any doubt in this concept?
No, sir. Clear.
Okay. Now, can you tell me the journal entry? Actually, if you have remembered the concept, yes. The journal entry is written here, so you don't have to repeat that. Loan account debit to bank, you can see here. If we pay, we write executor loan account debit to cash or bank account. And when interest is charged, the entry is interest account debit to loan account, executor loan account. So interest account debit to loan account, and at the time of payment, loan account bank. Okay.
Okay, sir.
So when you have to pass the journal entry only, then these two entry of installment will be repeated in every year. Okay.
Yes.
There is one more entry which is related to installment. The third entry, it is profit and loss account debit to interest account. Can you tell me why I have written this entry? Because the interest is nominal account. Okay.
I didn't understand.
Interest is nominal account. Is
Yeah.
that clear?
Yes, sir.
Okay. So interest is nominal account. If you remember the concept in journal entry, any nominal account balance is not carry forwarded in next year. Okay.
Yes, sir.
You don't understand. You seem confused.
Yeah.
Okay. Actually, do you remember the rules of debit credit?
Mm,
There was a real account, personal account, and nominal account. Okay.
yeah.
Okay. So in a real account, there may be furniture, cash, like these things. In personal account, there is Ram, Mohan, like this. And in nominal account, it is rent, salary. Is this clear?
Yes, sir.
So at every year closing, there is some furniture or cash balance in the books. Yes or no?
Yes, sir.
Because if you purchased a furniture in current year, at the end of the year, there will be some balance in that account.
Yes, sir.
Okay. In the same manner, if you transact with some persons like Ram, Mohan, there will be several transactions, and at the end of the year, okay, at the
Yeah.
end of the year, there will be some balance left, which is yet to be received or paid to that person. Yes or no?
Yes, sir.
Because if we transact continuously, there may be some balance in each of our account.
Yes, sir.
Okay. But in case of nominal account like rent, salary, there is no balance to be carry forwarded, because these balance furniture of current year will be taken to next year. Yes or no?
Yes, sir.
If there is balance in these two accounts, then it will be taken to next year also.
Yes, sir.
But rent, salary cannot be taken to next year because it is not paid for next year. Yes or no?
Yes, sir.
If you pay the amount of rent or salary for the month of March or for the month of December, so you cannot carry forward it to January. Yes or no?
Yes, sir.
It is related to December, so it cannot be carried forward.
Yes, sir.
Okay, so any nominal account balance cannot be carried forwarded to next period or next year. Is that clear?
Yes, sir.
Okay. So in the same manner, this interest is related to current year only. Yes.
Yes, sir.
So it cannot be carry forwarded. So if we open this account, if we write like open interest account like this. So if we pass this journal entry, it will be two loan account, let's say 5,000. And if we don't write anything else, then there will be balance of 5,000 at the end. Yes or no?
Yes, sir.
So we cannot carry forward the balance of any nominal account. That's why we have to transfer it to some nominal account, which is profit and loss account. So by profit and loss account, 5,000. Now there will be no balance this account. Yes or no?
Yes, sir.
Is this clear?
Clear, sir.
Do you have any question in this concept?
No, sir. It's fine.
So these two concepts, it is different from retirement. The first concept is to calculation of profit on the basis of time or sales. Okay.
Yes, sir.
Okay. Good. And the second concept is executor loan account. It is only change of name. It is prepared in the same manner as the retiring partner's loan account. So These two concepts we need to study in depth of a partner chapter. So our reconstitution of partnership is finished now. Okay. So do you have any doubt in partnership fundamental, goodwill, change in profit sharing ratio, admission, retirement, and death? These 6 chapters, you can ask question. Otherwise, we will start resolution of partnership form.
I will. Are we starting this chapter this class or next class?
Yeah, actually, I will explain a little bit here.
Okay. I mean, after this class, I will revise everything once. And
Okay.
if I have
Please
any doubt, I
revise
will ask.
and try to solve the question also.
Yes. Sir.
Okay. So, what is dissolution actually? If you see the concept of dissolution, okay, you can see here I have written a reconstitution of partnership that we have already studied. Is there is any agreement, and due to change in that agreement is written and it is called partnership deed. And if there is change in relationship between partners, okay,
Yeah. Yes.
reconstitution means change in relationship between partners. Okay, can you tell me how partners are related in a partnership form? What is the relation between partners?
Profit sharing ratio.
Profit sharing ratio, yes. So if we change the profit sharing ratio in partnership form, then it is called change in relationship between partners. Okay.
Yes. Sir.
Okay. So if we change the profit sharing ratio of partner, it is called change in relationship. And it is also called reconstitution of partnership. Okay. So
Yes.
you can also say the name dissolution of partnership. Dissolution of partnership. But it is different from dissolution of partnership form. Whenever firm is attached, then it is different. Okay.
Yes. Sir.
How can you tell me?
Sorry.
Can you tell me how it is different from dissolution of partnership?
I didn't understand.
Okay. Actually, a reconstitution that we have completed right now. You understand the reconstitution meaning?
No, sir.
No?
Reconstitution is it making change in profit sharing ratio?
Yes. Change
Yeah.
in a relationship between partners. Okay.
Yes.
It is also called dissolution of partnership. Dissolution of partnership.
Yes.
There is a similar word, dissolution of partnership form. Partnership form. Now, sometimes the students get confused by these two words. They think it is same, but it is not.
Yes. Sir.
Okay. So, can you tell me the difference between these two?
Dissolution of partnership is maybe like just the partners, like
Okay.
one or two of them are leaving, and then dissolution of partnership firm is shutting down the whole firm.
Yes, very good. Dissolution of partnership means there is change in relationship, and dissolution of partnership firm means end of relationship.
Yes. Sir.
Okay, so we are closing our business, so we don't have to maintain any balance in any of the account. So we have to close all the accounts because we are closing the business, so there is no need to maintain any balance. Okay.
Yes.
But what we do in dissolution of partnership, in reconstitution, in admission, retirement, death, we adjust some of the items in our capital account, in our balance sheet. We just adjust some of the items. But in dissolution of firm, we clear the balance sheet. We close all the accounts. We close our business. Okay.
Yes, sir.
So this is uh, two words, two sentence that is different from each other, but it is little confusing because it is similar words. Dissolution of partnership, firm. Okay, so is this clear?
Yes.
Okay. Now we have to prepare 4 accounts in case of dissolution of partnership firm. The first is a realization account. Now, a realization account is also different from revaluation account.
Sir?
A realization account we have to prepare in case of dissolution of firm.
Okay.
Okay, and it is different from revaluation account.
Yes.
Revaluation, you remember?
Yeah.
A revaluation means when there is change in the value of
Value.
assets and liabilities.
Yes.
Yes.
Yeah.
We record the difference between difference in amount or change in value. Okay, we only record change in value, not old value, not new value. We only record change in amount.
Yes.
Okay, so that is a revaluation account, but we have to prepare here realization account. That is different from a revaluation. The second, we have to prepare partners capital account, because we are closing our business, so we will pay or receive any surplus or deficit of partners capital account. If any partner capital balance is in surplus, then he will bring his cash, and if any partner's capital balance is in deficit, then he will bring cash into the firm. Okay, so we don't have to maintain any balance in capital account also. After that, we have to prepare cash account.